Hi, I'm Kyle, and I've helped over 500 people to buy pre construction properties in Calgary over the last 4 years. Calgary's real estate market is at a tipping point, influenced by population, growth, affordability challenges, and shifting buyer preferences that are shaping the city like never before. Let's break down the key trends driving these changes and what they mean for buyers, sellers, and the future of the Calgary housing market. First up, it's population growth and demand. Calgary's booming population has outpaced housing supply for years now. We have seen record population growth for the last 8 quarters. And while new construction is helping, it's simply not enough to meet the demand at every price point. More people are competing for limited homes, and that's a recipe for rising prices. And where are buyers turning? Well, the affordable options. Row homes and condos are the stars of the show right now, with resale prices jumping 7% and 9% year over year as of November. But there's a catch. As more buyers flock to these options, first time buyers can be squeezed out and left on the sidelines. Meanwhile, detached and semi-detached houses priced over 600,000 make up most of the available inventory in the market. For many, the Canadian dream still means a detached house with a white picket fence, but it's a dream that's becoming harder to reach for many of the mid-range buyers in Calgary. Even with more inventory, balanced conditions still favor sellers. Supply is creeping up, but many segments are still seller leaning. That likely means price increases, even if they're smaller, are likely to continue as buyers compete for limited affordable inventory. So, what's next? Improving supply is going to slow the pace of growth, I think. But Calgary's real estate prices aren't likely to dip anytime soon. You have seasonal patterns and buyer fatigue that are currently shaping the narrative in the city. And after 4 years of steady price increases, the stats might seem worse than they are right now. But historically, the first 6 months of the year have driven the biggest price gains overall. So, will 2025 follow the same trend? Only time will tell. But for now, let's take a more detailed dive into what the November 2024 statistics reveal about Calgary's housing landscape. So we'll start with the detached market. And you can see for sales that they've actually gone down for about the last 6 months. Now, what's to note is that they are within line of sales of the last 4 years. They're within the averages. Same with new listings. You've seen them actually go down as well. And if new listings are going down, that's going to impact sales too, because you can't sell properties that aren't listed. The sales to new listings ratio, that's actually up at about 80%. That means 80% of the listings that are coming to market are selling. Inventory, you are seeing inventories build a little bit. It's a little bit higher than it has been over the last 4 years, but still not unreasonably so. The months of supply is building, you're up just over 2 months of supply. Anything between 2 and 4 months is considered a balanced market. The more affordable options, detached under 700,000, there's less than 2 months supply available. It's more of the higher priced units where you're seeing the building of supply in the detached market. And days on market, they are taking a little bit longer to sell through the winter, but you're definitely within expected norms for the season. Looking at prices, benchmark price. It has gone up every single year from 2021. And it's higher than it was last year as well. The benchmark price is about 750,000. Looking 4 years ago, January of 2021, it was about 510,000. That is a massive price increase in just a small amount of time. Now, can prices continue to jump like this? Absolutely. You have seen about $50,000 price increases for the last 4 years. I think it'll be a little bit more moderate, but I do expect prices in the detached market in Calgary to continue to go up as well. Same with average prices. Average prices blend the prices for all of the different detached properties that are available. So it can give a little bit more of a skewed statistic, and you are seeing that. The average price is coming down, and that's because the more affordable options are the ones actively selling. The higher priced ones, they're sitting a little bit longer because people aren't willing to decrease the prices or cut the prices to the level that they need to sell. Now, moving to the townhome market, it's a very similar situation. You've seen sales that have gone down for about the last 6 months, but absolutely within expected seasonality and within the averages of the last couple years. New listings as well. You've seen those come down, but they were actually a little bit higher than the last 4 years, but nothing crazy. Sales to new listings, you're up at about 80%. It'll be interesting to see what the December numbers are to see if there's more sales than new listings in that month as well. Inventory, you have seen it building from the beginning of this year, and this can be where it gets concerning. But nice to see in November, there was a significant drop of units that were available in the inventory available in the market. Months of supply, you've seen it edge up a little bit, but you're under 2. This is technically a seller's market. In days on market, you have seen it tick up, but you're sitting at about 35 days. If you're in Toronto, you would kill for these sorts of numbers. And looking at the benchmark prices, again, they have gone up consistently over the last 4 years. The first 6 months of the year, that's where you're seeing the majority of price gains. And then it tends to plateau and even come down a little bit as you go into the winter market. What'll happen in 2025? I expect a similar trend. And moving to condos. Sales have come down significantly from the highs, about half of the highs of April. And that's just directly resulted to the new listings as well. You can't sell properties that don't exist on the market. New listings have crashed from about 1,300 down to about 650. Now, is it to be concerned? Well, we'll have to see how it plays out. Sales to new listings, you're at about 65%, which is a little bit lower than the average for the last 4 years, but still relatively healthy. Inventory, this has consistently built throughout this entire year, but you have seen it peak back in September, and it's come down in October, November, and I guarantee it'll come down in December as well. Months of supply, you've seen this tick up. You're up at about 3.5%. Now, where this goes is going to be interesting to see. Again, remember, anything between 2 to 4 months is a balanced market. Days on market, you are seeing that go up. You're up at about 45 days on market now, where it was about 22 days earlier this year. Record lows at the beginning of this year. Now, what's interesting on the condo market, I have several clients in this situation. They have tenants in the unit. They posted them a couple months ago when prices were at the absolute peak, when the market was on fire, and they have not done price reductions to move those units because they don't have the incentive to do it. They have a tenant in the unit paying the rent for them, and they were trying to get top dollar for those units. And as you can see, the prices really peaked in April and really again in the summer in July and August, and they've come off those highs a little bit since. Again, completely consistent with previous years as well. And you've seen a large price gain between 2023 and 2024. So there is buyer fatigue out there, and there are fewer, more affordable units available for rent as well. So that's how the average prices have been affected. It's the more expensive, newer units coming to market that you're going to see the average prices push those up. But I expect both of these to continue to tick up through 2025. So Calgary's housing market is evolving fast, and it's crucial to stay informed. So if you want to know how these shifts impact you and what the best possible investment opportunities are available right now, let's connect and find out.